Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Apple stock, Tesla stock, and Ford stock. We're going to be going over their future price predictions according to analysts, as well as what their estimates are going to be for their upcoming earnings report, which could produce fantastic price action for these stocks. This will also be the start of a new series of I'm going to go over the 100 most popular stocks on the stock market, and I'm going to give my current price predictions, what analysts think of these stocks, and if they are good buying opportunities for investors like you. So if you want more videos like this one, remember to go and smash the like button right now, subscribe if you are new, comment your thoughts down below on this series, and without further ado, let's begin. Many technology stocks have gotten absolutely hammered lately, including Apple shares, which have also fallen in price. However, Wells Fargo has recently increased their price target for Apple stock, ticker symbol AAPL, all the way up to $205 from their original price target of $165, which implies around a 25% upside potential. Currently, the AAPL stock price trades for around $162 per share. The low-end price target, according to analysts, is $128. The average price consensus among analysts is $179, and the high-end price prediction for AAPL stock is $210. And if you didn't know, Apple manufactures and makes smartphones, computer tablets, and wearable smart devices, among many other things, and overall, this is one of Wall Street's most favorite stocks, so Wall Street is naturally very bullish on this stock. They're so bullish, in fact, that some analysts even think that Apple stock can reach a market capitalization of $5 trillion by 2025. Currently, Apple has reached around $3 trillion, but it has pulled back, so to almost double the stock price and the overall market cap by 2025 in just 3 years is absolutely astonishing. The reason why many analysts think that Apple could pull this off is mainly due to their amazing revenue growth as well as their overall portfolio growth, and as you can see on screen from this chart over here, we can see that their portfolio growth has absolutely exponentially increased as time has gone on, and this is expected to increase all the way through 2025 and the foreseeable future. So this is just to say that investors and analysts are extremely bullish on the Apple stock price. However, why is Apple stock pulling back right now, right before their earnings report, and should investors such as me and you use this as a fantastic buying opportunity? And the short answer is yes, we should use this as a buying opportunity because analysts say so, and because Apple is a fantastic blue chip stock to own. An analyst from Morgan Stanley even expects Apple to report better than expected quarterly earnings on their earnings report for January 27th, and he says this, and I quote, "Apple shares are up 19% since the October 4 lows, suggesting December quarter upside is largely priced in. The analyst views Apple stock as more of a defensive stock because of its high-quality products and its customer loyalty with very high retention rates among customers that it has already obtained. The analyst says that Apple stock is set to outperform the overall market due to its amazing product cycles, such as the release of the iPhone SE 3 in April or May of 2022, the iPhone 14 is set to launch in fall of 2022, and the MR headset, which will launch in 2023. So he has a price target of around $200 per share by the end of 2022 with a buy rating, so he is very bullish on this stock, and we should be too. Even though Apple has fantastic fundamentals and it's an overall fantastic company to own, and I think it should be literally in everyone's portfolio, some people have been selling off their Apple stock due to this tech and innovation sell-off that has heavily affected the NASDAQ index, which has fallen around 10%. According to the Crossmark Global Investments chief market strategist, they say that so many times Apple is seen as a defensive stock, we noticed that over the last maybe 6 weeks, when a lot of other tech names were down, Apple continued to do well. If you don't have it in your portfolio, wait for that pullback and add some of that to your holdings for more of the base holding in your portfolio. Basically, they're saying that Apple stock should be a cornerstone or foundation of a healthy portfolio, and I honestly agree with them because this stock is absolutely fantastic. But what should we expect from Apple's upcoming earnings report? Well, this is tricky because Apple has experienced some major hiccups as of late, especially in the last year or so, due to logistics challenges as well as supply constraints, which led to a loss of revenue of around $6 billion just in quarter 4. We also saw Apple got hit pretty hard with the chip shortage, which is continuing to plague the company in the fiscal quarter of 2022. But with that being said, on average, analysts are anticipating that Apple will have a very positive guidance for their upcoming earnings report for the second fiscal quarter, with revenues coming in at around $90.6 billion, which would only represent around a 1% gain year over year growth wise, but this is still very good because they have not backslid at all, so at least we got to lock in some growth. So we can look forward to this and other comments from management on Thursday, January 27th, which is when Apple is going to report its fiscal second quarter results. Speaking about earnings and results, we also have Tesla, which is going to release their earnings as well, and that's going to be on January 26th for their fourth quarter. This means that Tesla will literally release earnings next week right before Apple releases theirs. Many investors are very excited for this upcoming earnings report because Tesla was nominated and they ended up winning the best-selling electric vehicle brand in Europe for 2021, so that's extremely exciting. Also, we can see that the TSLA stock price has absolutely skyrocketed, and analysts have repeatedly increased their stock price targets, which we will talk about right now. Currently, the TSLA stock trades for around $943 per share. The low-end price target is $67, the average price consensus is $926 per share, and the high-end price prediction for TSLA is $1,480. And if you're not familiar with Tesla, Tesla makes, sells, and markets electric vehicles, energy generation products, as well as energy storage systems. A Credit Suisse analyst expects Tesla to absolutely destroy their upcoming earnings report in a good way, so he ended up raising his price target for the TSLA shares from $830 all the way up to $1,025. He has earnings per share coming in at $2.81 per share, while the overall consensus among analysts is $2.25 per share. The reason this analyst is so bullish on Tesla is because of four main factors. Firstly, and this is the thing I like most about Tesla, and that's their production capability and capacity. Secondly, they have fantastic gross profit margins, and then they also have new batteries coming out on top of new production announcements, such as their various gigafactories that they are building. And all of these factors are going to fantastically impact the TSLA stock price very positively, in my opinion, and according to analysts. Now, what's interesting is that this analyst says to hold the TSLA stock, and he doesn't have a buy rating on it because he believes that the stock is overvalued due to Tesla's extremely high PE ratio, which is their price to earnings ratio of 325.37. And I've done a video on this before, and the PE ratio can basically signify two things. It's either going to signify that the company is extremely overvalued right now and the stock price is too high compared to the earnings that the company is bringing in, or it's signifying that investors are extremely bullish on this stock and they expect the company to scale very rapidly to eventually obtain and reach this earnings many years in the future. And I think it's more of the latter case, that investors are extremely bullish on this company and they believe that Tesla can actually scale up to these ratios. Other analysts, including one from Piper Sandler, says that he is also very bullish on Tesla and he raised his price target to $1,300, which is absolutely fantastic news, especially if you already own Tesla shares. And the reason why he's bullish is because of their fantastic delivery numbers, where he says this. He says, "We are boosting our estimates to reflect better than expected quarter 4 deliveries, as well as a higher estimate for deliveries in 2022. We now expect 1.53 million units, which is an increase from 1.38 million units. We are also nudging our 2022 margin expectations higher because with strong volume and rising contribution from software, we suspect Tesla will continue exceeding profitability expectations." He adds that investors often ask us whether demand for competing EVs might sap Tesla's sales, but in our view, Tesla's market share is limited only by the company's own production capacity, and if 2022 goes as planned, capacity will soon get a bigger boost. So this analyst 100% agrees with my own analysis that Tesla's main competitive advantage is their ability to manufacture their electric vehicles, and the market is so large right now, the more Tesla can produce, the more their sales will increase because buyers just can't get enough of electric vehicles. So it's really important for this company to continuously be producing these vehicles and send them out so buyers can actually buy them, which will reflect very positively back on the company and therefore the stock price. We even have a Jefferies analyst that says he is extremely excited for Tesla's upcoming earnings report, and he increased his price target to $1,400 per share. He says this is going to be critical to validate or not the Q3 profit dynamics that could see Tesla 1. Carve out meaningful share from legacy OEMs busy protecting their own share by ramping up BEVs, and 2. Claim a disproportionate share of the industry profit pool. So that is just to say that Tesla is continuously increasing and expanding their market reach, while other manufacturers and legacy makers, although they are infiltrating the electric vehicle market, they are not doing it as successfully as Tesla is. However, on the flip side, we also have to balance this with a recent report that came out from the Bank of America research team, which says that Tesla's vehicle market share of the EV market will actually decrease from 69% down to 19% by 2024, while other legacy automakers such as Ford Motor Company and General Motor Company, ticker symbol GM, will be the largest gainers in the EV market for those particular years. So we have to balance this view, but honestly, there is no way these legacy makers, in my opinion, will catch Tesla because Tesla is already so far ahead of the overall industry. So with all of this good news coming out about Tesla before their earnings report and analysts increasing their price target for Tesla, why are shares dropping? Well, this is happening for a multitude of reasons, but according to Reuters, besides the Federal Reserve increasing interest rates, we are seeing bond rates for 10-year Treasury bonds increase, which is really heavily affecting and impacting growth stocks and innovation stocks and technology stocks such as Apple and Tesla. There's also another reason, according to Reuters, which says that Tesla has started to rub elbows and have some conflicts with US Congress because Congress has been criticizing Tesla's decision to set up car showrooms over in China. Congress says this is a misguided and poor example that gives the Chinese government a pass for its reprehensible policies. But honestly, to me, Tesla is not doing anything wrong, and it's actually very brilliant of Tesla to infiltrate such a huge electric vehicle market that is over in China. So now let's talk about Tesla's actual earnings report. So the specific metrics that we're going to be looking at are their earnings per share and their revenues. So according to Zacks Rank, they believe the quarterly earnings for Tesla is going to be $2.02 per share, which is down from the average analyst price consensus as well as the other bullish analysts that we looked at previously. And they think that the revenue is going to come in for the quarter at $15.93 billion. But honestly, regardless who's right, these bottom line estimates are all very positive, and they should reflect very positively on the TSLA stock price. The article says that the bottom line is that all of these estimates are extremely positive, and they equate to over a 152.5% year-over-year surge. Specifically referring to their earnings per share, for their revenues, their year-over-year increase would be about 48.3%. Now, lastly, I want to talk about Ford, ticker symbol F, because a Jefferies analyst recently increased their stock price target for Ford shares up to $25 per share. However, instead of a buy rating, they actually have lowered their rating to a hold rating. So why is that? Well, currently, the Ford stock price is $20 per share. The low-end price estimate, according to analysts, is $11. The average price consensus is $21, and the high-end price prediction is $30 per share. And if you didn't know, Ford is a legacy vehicle manufacturer that sells both gas and electric vehicles, as well as extremely popular trucks. And because of this, Ford is actually looking to double their pace for their electric Ford F-150, which is one of their most popular products, and they want to ramp production up to 150,000 units this year because they have had a flood of reservations for this particular truck of around 200,000. The same analyst that actually increased their Tesla stock price also increased their price target for Ford stock by about $5 to $20. So the original price target for this analyst was $15, and they have increased that to $20 per share. The reason for this is because this analyst believes that Ford is going to attain higher than anticipated free cash flows, or cash flows in general, as well as their very strong balance sheet and their connection with Rivian, and we're going to talk about that right now. Ford currently has around a 12% stake in Rivian, which is going to add around $8.2 billion to its fourth quarter bottom line. The analyst says that reevaluations to account for changes in Rivian stock price could result in related gains or losses each quarter reported as special items on Ford's balance sheet. So we need to pay attention to that, because Ford's success is also going to be linked to the Rivian stock price, which is currently downtrending. However, Rivian in the long term is expected to do very well, so if you can find a bottom in Rivian stock, that could be a fantastic stock to look more into. The analyst went on to say that we think it's premature to re-rate legacy OEMs for their EV progress, since earnings remain mostly driven by cyclical shortages. Returns remain within historical norms, and the EV transition is largely a zero-sum game initially, end quote. So the analyst is basically conveying that investors or analysts should not be too bullish on legacy automakers because they are flooding into the EV market. They actually haven't been in the EV market long enough to give investors a confidence that this company can consistently sell these electric vehicles. It's too new, therefore we shouldn't change our stock prices too radically for these legacy automakers. Ford is set to publish their fourth quarter earnings report on February 3rd, and analysts are currently looking for an adjusted bottom line of 43 cents per share for their earnings per share and revenues of around $35.76 billion. This would mean that Ford's adjusted earnings for the full year would come in at about $10.5 billion to $11.5 billion overall. So it's not really that bad. However, out of these three stocks, I personally would like to buy Apple and Tesla, and I would hold off on Ford stock if this is a long-term investment. However, investors have had very good success investing in Ford stock in the short term, so it is up to you, because my goals are different than your goals. But I do want to hear your thoughts down below. Comment your thoughts about Apple stock, Tesla stock, and Ford stock. Subscribe if you are new. Remember to smash that like button if you made it all the way to the end of the video, and I will see you in the next YT video.